Same income, not the same taxes. That is the single most important sentence in this video. And by the end of the next 10 minutes, I'm going to prove it to you with numbers you can verify yourself. An employee earning 600,000 pesos a year pays an effective rate of about 20%, income tax plus mandatory government contributions. A business owner earning the exact same 600,000 pays about 10%. The difference? 56,000 pesos a year. And none of this is illegal. All of it is written directly in the tax code of the Philippines. Let me introduce you to Ramon and Tony. Ramon is 36 years old, senior accountant at a company in Makati, earns 50,000 pesos a month, 600,000 a year. He pays his taxes honestly, always has. Tony is 37. He owns a small printing business in Quezon City. He also earns about 600,000 pesos a year. Same two men, same income, completely different tax situation. Ramon's tax is withheld by his employer before the money ever reaches his hand. No choice, automatic. Tony files quarterly, and before he calculates his tax, he first deducts his allowable business expenses: office rent, electricity, his vehicle, his phone, client meals. In total, those deductions reduce his taxable income by about 180,000 pesos, which means Tony doesn't pay tax on 600,000. He pays tax on 420,000. Ramon, 118,000 pesos. That is income tax of 80,000 pesos plus SSS, PhilHealth, and Pag-IBIG contributions of about 38,000 pesos. Effective rate across all of it, 19.7%. Tony, 62,000 pesos. Income tax of 35,000 pesos on his reduced taxable income, plus his voluntary contributions at lower declared levels. Effective rate, 10.3%. Same income. Ramon pays nearly double, and this is completely legal. 3 structural reasons create this gap. First, the withholding tax system. Ramon pays his tax before he sees the money. Tony pays quarterly, meaning the money stays in his hands for up to 90 days before going to the BIR. During those 90 days, Tony can use that money, invest it, or keep it liquid for emergencies. Over a working lifetime, this time advantage is significant. Second, and this is the biggest gap, deductible expenses. As a salaried employee, Ramon has almost no meaningful personal deductions allowed under current law. He commutes to work every day. He uses his phone for work. He eats lunch with colleagues. He cannot deduct any of it. Tony, his office rent, electricity, vehicle, phone, meals, internet, equipment, insurance, and professional development, all deductible before tax is calculated. Same types of expenses. Related to earning income, completely different treatment under the law. Third, passive income tax rates. As wealth accumulates, income shifts from salaries to assets, stocks, dividends, real estate. And those are taxed at fundamentally lower rates. Dividends, 10% final tax. Long-term capital gains, 15%. Compared to the 30 to 35% a high-earning salaried employee faces. Workers pay up to 46% in total government contributions. People living on asset income, 10 to 20%. Work is the most expensive thing to tax in the Philippines. Wealth is the cheapest. Now, here's what you can do about it. All 3 of these are legal, all available now, not just for business owners. First, Pag-IBIG MP2. The MP2 account pays 6 to 7.8% annual dividends, and those dividends are completely tax-free. In a regular savings account earning 0.10%, 2,000 pesos a month over 5 years becomes about 120,000 pesos. In MP2 at 7%, tax-free, closer to 144,000. Same monthly deposit, different vehicle. Only 5% of Pag-IBIG members have an MP2 account. 95% are missing one of the best tax-free investments available to ordinary Filipinos. Opening one takes 15 minutes on the virtual Pag-IBIG app. Second, BIR registration and the 8% flat tax. Under the train law, if you have any side income from freelancing, online selling, or consulting, and your annual gross is under 3 million pesos, you can elect an 8% flat tax rate instead of the graduated brackets. The first 250,000 pesos of annual side income is tax-exempt. Above that, 8% flat. No percentage tax on top. Compare that to your withholding tax bracket as an employee. And once you have a registered business, your internet, your phone, and a portion of your home workspace become deductible. You are not cheating. You are using the same provisions of the law that business owners have used for decades. Third, shift savings toward passive income instruments. Interest income from high-yield digital banks, Maya, CIMB, Tonic, is subject to 20% final withholding tax. That is lower than most employees' effective income tax rate. A UITF money market fund operates the same way. Regular stock dividends, 10% final tax. Every peso that shifts from earned income to portfolio income is taxed at a lower rate. That shift, over 10 years, is worth tens of thousands of pesos.
Here is your one action tonight. Open your most recent payslip. Find the line that says withholding tax or income tax. Write that number down. Multiply it by 12. That is your annual income tax. Now compare it to your total expenses over the year. When you see that proportion clearly, how much goes to tax versus everything else you spend, a lot of financial decisions will become sharper. In the next video, we do the most detailed budget breakdown this channel will ever produce. A 30,000 peso salary in Manila, every single peso accounted for. From rent, to food, to the cost of getting to work. Subscribe now so you see it the moment it goes up. See you in the next one.